You're listening to the REITE Club podcast, where the focus is all about helping you grow your real estate investment portfolio and live the life you want to live. Come grow with us and join our community at thereiteclub.com. And now your hosts, Sarah Larby and Alfonso Salemi.
We knew it wasn't going to be that simple. Like I'm happy you brought up income property, because I don't know if enough people, we hear a lot of podcasts and people say I just put in a secondary dwelling, but really I think the root of a lot of those ideas is that show. Now, and we knew that it wasn't as simple as just simply going and doing it. There's a lot more to that, and finding a property that has, you know, the right structure and that it can actually be done, because I think a lot of people probably get themselves into trouble with ceiling heights and so on.
And in some neighborhoods, you just can't do it.
Some neighborhoods, the zoning. But yeah, so yeah, we talked a lot about it, and this is something we do as a couple, where we talk out every decision, and if one of us is not on board, then we pull the plug and we don't pursue it. But it was something that we were both on board for. We really didn't have anything to lose. We worked hard to have those funds to be able to put in the secondary dwelling. At the time, and I don't want to make this sound like we just simply went and did this. There was a lot of sacrifices that went with this, right? We, I was working 2 jobs at the time. I was working, as a social worker at one of the hospitals, and then working in the emergency room at a children's hospital. We were avoiding, a lot of spending. We're eating out. We, did not go on vacations, sharing a car, et cetera, to make that happen. So yeah, we made we analyzed it, looked at if it was possible, it was, and we just took the leap, and we don't regret it.
You know what? I think that's an important thing that you said, because a lot of people look at like the success where people are now. Oh my God, they can retire. And then they don't actually realize the sacrifices that were put in the beginning. And I'll tell you, ultimately, we all think that they're well worth it once we get to the other side. But like you, I was working 2 jobs. Like my first job, I was barely making like $5 an hour when I look at the time that I was putting into it. Again, barely could afford a car, barely could afford to have, the nice meals and going out and that kind of stuff. But there's sacrifices that we make, I think, from a temporary standpoint, to be able to, live like most people can't in 5 years, 6 years, 7 years. So I think that's really important that you said that, because it's like that iceberg picture, right? People see the top and they don't see all the stuff that goes into the bottoms. So obviously you started with house hacking. How did you get into that second one where you're like, actually now this is, we're investors and we're, doing something that's out of where we're living?
Yeah.
Yes, well, when we saw the power of real estate and how much our house appreciated in such a short period, we thought, okay, we're not having too much trouble managing the tenants. It's going really well. We're really enjoying it. And I'm sure, there will be challenges along the way, and there was, but in 2019, that's when we were ready to to refinance this house basically, and use the money for a down payment on our row house here in Ottawa as well. Which same thing, we did a mini BRRRR.
Yeah. And that's the thing, we often you hear in other podcasts or just in networks where you hear somebody doing something that works. So say it's a secondary dwelling conversion, they'll go ahead and repeat that. And we're not close to that either, but we had the funds from, the savings that we had from the secondary dwelling, appreciation, and we were looking for something, and it just so happened to be that a freehold row house was it would cash flow. It had enough value add to make it worthwhile. So it was just pretty basic. It was some flooring, backsplash, stainless steel, faucets, just basic stuff.
Light fixtures, just patch and paint.
And we were able to rent that property out, and away we went with another property in our portfolio, and it was cash flowing from the day we got it, and not an issue to rent it out. And then basically we just continued doing that, and away with the next single family, and so on.
I love that, because what we always talk about that, and a lot of people say you can't cash flow on single family homes. That was a big reason with rent to own we buy single family homes, and because of option payments. But how did you acquire this property, or how did you find it and still be able to make it cash flow? Like was it off market? Was it through a listing? How did you guys acquire or find the property?
Good question. It was on MLS actually, that property, and it was in the winter, so that also helped. The sellers were very motivated. I'm not sure, something happened and they really needed to sell, and the market was not as crazy as it is right now either.
Still competition. There were still multiple offers on it, but it's just to show that MLS is an excellent resource. You can find properties that cash flow, but we were spending a lot of time on MLS trying to find the right deal. And
we had a great real estate agent as well, who was
That's key.
investor focused, and he was awesome.
And we knew how to run the numbers. Like you see, a lot of people they really they almost ignore MLS. And they believe that only good deals are found off market. And there's a lot of great deals that are off market, but there's also off market, and then there's off market. You hear people talk about, I had this deal on off market deal because they're on someone's email list. But how many people are on that email list? You're still in competition with a lot of other people. But anyway.
And a lot of those deals are retail. Like if you really, really run the numbers, they're actually not below market anymore because of the lack of inventory, they've been able to, and I've talked to many of them because many of them are my friends, they're able to still do really well by putting it as, even a retail price, and still there's a lot of interest. So why wouldn't they? I mean, they're in a business too.
And also we found out what the seller was looking for, and we knew we had the funds. We have a really good relationship with our mortgage broker as well, and we knew our finances were good to go. So it was not an issue for us to close very quickly. So I think that played a big role.
Yeah.
In a lot of our...
Another way to another technique that I don't know where we picked it up, but we were able to waive our conditions by doing a few things. I mean, obviously we knew we had the funds in place, we knew we could get financing, but in terms of the inspection, we through the agent we found out what the seller wanted, which was a quick close, and so we brought our own inspector. We were willing to pay him his rate to be with us on the walkthrough, so that we didn't have to have that as a condition. And we knew the property was in relatively good shape, but we wanted to have an inspection because it gives us a timeline, when to start thinking about the roof and the furnace and the windows, etc. And so we were able to waive our conditions, and there were offers that were higher than ours on that property, but they went with ours because we gave them what they wanted.
Yeah, sometimes a clean offer gets the win, right? So let's just fast forward a little bit, because you've been doing a lot of really awesome things in the last even 2 years, and you're I think pivoting to multifamily. Can you share a little bit more about that?
Yeah,
sure. So we wanted to scale up because it was relatively hands off with the single family properties that we have, and they were generating enough cash flow that we didn't have to rent out our lower level anymore. So we took that back. Along came the kids. And we wanted to continue scaling up, but we didn't want to make a ton of mistakes doing it, and we wanted to scale up faster. So we hired a coach, and we went through all the different options. And there's no one perfect one. I know rent to owns are excellent, and some people focus on secondary dwellings, and multifamilies just looked like something we really wanted to invest in, because at the end of the day, if you have a multifamily, say it's a 6-plex or 10-plex, etc., you have all those tenants paying into the same roof, paying into the same furnace. If you go vacant on one unit, the other tenants cover off for that vacancy. And we started to look outside of the Ottawa market. And so we got connected to a network of other investors. We just started putting ourselves out there much more. And then we basically made the decision that we wanted to invest in multifamilies. We feel like that's the safest thing for us right now. Not that we won't eventually maybe go back to doing something different. We invest in whatever works, right? We're not shy to pivot out of single families or pivot out of secondary dwellings and go into multifamilies. We do what works, and it just felt like multifamilies would be the next step up for us.
I think what we liked also about the multifamily, like 6 units and plus more specifically, is that the building qualifies, for the bank, not us. And we knew that eventually, with our incomes, and we would max out at some point. So we thought, let's learn the strategy so that that doesn't happen and that we can continue to
Yeah,
see.
that was an eye opener for us. Like it's been a whole lot of learning with coaching, but with single families, and you see this when you go to the banks, the first thing they ask for are your T4s and so on. On the multifamily side, once you hit 6 units and up, it's a commercial property. And the first questions they ask are they want to see the rent roll, the expenses. So they look to qualify, like Esther said, qualify the building first. And then they look at you afterwards. And they, from what we've experienced, like banks love multifamilies. They love them.
Especially purpose-built.
Purpose-built.
Yeah.
Thanks for listening to the REITE Club podcast and joining our community of real estate investors online at thereiteclub.com, where the focus is about helping you grow. We look forward to seeing you again next week. Thanks from your hosts, Sarah Larby and Alfonso Salemi.